Right, okay. The next standard is IAS 38. IAS 38 talks about intangible assets. And what is intangible asset? This will fulfill and satisfy all the conditions to be an asset. But only thing, it will not have a physical identity. It will be intangible. You cannot touch and feel. That's all. So you can write it down. And identifiable non-monetary assets. An identifiable non-monetary asset without physical substance. Physical substance. This is defined by IAS 38. Now we need to understand what you mean by identifiable. I will share this to DC, then we'll talk about it. Personal report, good go.
Personal report, 3 million.
You have to remove it from the
Yes, now
right. So to find out how to define identifiable, it should either it is separable, capable of being separate, or divided from the entity, and you can sold, transferred, licensed, rented, or exchanged separately. For example, now you see you have 3 pieces of table here. If you can use this table as a separate one, then that's what we call it separable. And you should be able to purchase, or you could be able to sell it, you could be able to transfer it, you can separately license it, you can separately rent it, and so on. Individually, or with a related contract, or identifiable asset, or liability. Regardless of whether the entity intends to do so. You don't need to sell, but you should be able to do it. Or it arises from contractual or other legal rights. Regardless of whether those rights are transferable or separable from the entity or other rights or obligations. So this is what identifiable is. Then next we need to understand monetary versus non-monetary assets. So what is that then? Money held and assets to be received in fixed or determinable amounts of money. What are monetary assets? One example of monetary asset is cash. Money held in your hand, and assets to be received in fixed or determinable amounts of money. Then examples are cash and receivables are both examples of monetary assets, and therefore do not need the definition of an intangible asset. For you to call an intangible asset, that should not be a monetary asset. Is that right what I am saying? Non-monetary asset, you see? So if it is a monetary asset, then it is not an intangible asset. Then property, plant and equipment and inventories are examples of non-monetary assets. However, they have physical substance, and therefore also do not meet the definition of intangible assets. Computer software, brands, license, patents are all examples of intangible assets. Next is recognition. Now we need to find out what the recognitions.
So in that situation, and assets don't have a monetary value.
I didn't understand your
Now
question.
you're talking about assets don't
Yes.
have a monetary value,
Correct.
right? I'm talking about the tangible or
No. What the meaning of monetary? It's not monetary value. It's monetary asset.
asset.
Every asset will have a monetary value.
Yeah, that's right. Yeah.
But whether it is a monetary asset or non-monetary asset is a question.
Asset, monetary assets.
This table is a non-monetary asset.
Cash is a monetary.
Cash is a monetary asset. Receivable, even payable also monetary item. It's not a monetary asset, but it's a monetary item. You understand?
Yeah.
So now we will look into how we recognize fine. An intangible asset may be recognized in the financial statement if it meets the following conditions. What are the conditions? The definition of an intangible asset. It should satisfy the definition of intangible, which we discussed. And it should also satisfy the recognition criteria. Now, if you talk about IAS 16, there again we talked about recognition criteria. Same thing. So, it is practicable that future economic benefits associated with the asset will flow to the entity. That's one condition. Second condition, the cost of the asset to the entity can be measured reliably. These two terms. All your assets should be able to produce future economic benefits, and you are able to measure the cost reliably. Estimated, possible, vague, rough, not acceptable. Clear? Fine. Good. Okay, now let's try this question. Started doing questions from the revision kit.
Yes. Yes.
Are you succeeding or are you struggling?
No, I have the answer sheet also.
There you have the
So,
answer sheet.
before doing any more confusions only I can.
Fine. Which three of the following are likely to meet the recognition criteria of IAS 38 intangible assets? Expenditure of 300,000 on increasing the skills of staff. 250,000 acquiring a license to operate a new geographical location. 28,000 is spent on advertising a new product which is expected to generate economic benefits for the entity. 100,000 on computer software acquired from supplier. A brand valued at 500,000 acquired as part of the purchase of a new subsidiary. An internally developed brand name estimated to be worth 100,000. What do you think? What are the answers?
So the first is 250,000 acquired to license.
Okay.
100,000 spent on software acquired,
Okay.
and a brand valued 500,000 acquired to part of a purchase of a new subsidiary.
That's all. Correct. You want me to explain? No, that's it. Enough, no? So then we have.
Internally developed brand name will not come to these.
No, exactly. We discussed about it.
Correct.
Yesterday we talked about that.
that.
So I studied the categories of intangible assets. So we you will write it down a note. Categories of intangible assets. IAS 38 breaks down intangible assets into the following categories. Number one, acquired intangible assets. Acquired intangible assets, which can be either under that sub-note, separately acquired O, second one, acquired as part of a business combination. That's what we just saw. And the second from the big note. Okay, internally generated intangible assets. Okay, now the subtitle, acquired intangible asset. Okay, I share the note to you. The recognition criteria are always assumed to have been met. We have to assume, for us to say it's an acquired intangible asset, the recognition criteria presumed to have been met. For intangible assets that are acquired separately or acquired as part of business combination. So two possibilities: acquired separately, recognized as an intangible asset, stated. Acquired as part of a business combination, recognized as an intangible asset separately from goodwill.
Oh,
Now, when you doing the consolidation,
Consolidation.
we work out the goodwill.
correct.
But here, in that acquisition, in the balance sheet, if you see
Yes.
any say, intangible assets part of this acquisition, then that should be recognized separate to goodwill.
Ah,
Goodwill is arising as a result of the combination.
yes.
In the group accounts, irrespective of whether recognized by acquiring before the business combination. If only separable together with a related contract, identifiable asset or liability grouped together with related item. Fine. Now we talk about business combination. This is actually coming from IFRS 3 that we discussing in our other class.
Correct. So business combination.
Yeah, subtitle, business combination. A business combination is a transaction or other event. Is a transaction or other event in which an acquirer obtains control of one or more businesses within bracket IFRS 3. Fine? Now, what you need to understand here, for business combination, we will not go into detailed discussion why we are studying in the group accounts. Okay, subtitle, goodwill. Goodwill reflects, okay then, yeah. Goodwill reflects yes, goodwill reflects an entity's value over and above its recorded value. Equation, I hope you know the equation. The fair value minus net asset is what the goodwill. It could be plus or minus. Plus in the goodwill, minus the negative goodwill. it is often referred to okay, so it is often referred to as representing the reputation of a business. That's what the goodwill is.
Reputation of business.
Yes. There are two types of goodwill. First one, internally generated goodwill. Number two, goodwill arising as a result of a business combination. Now, can you again write it down? Internally generated goodwill.
As a result of
Business combination. Internally generated goodwill. You can say, do not recognize. Do not recognize as an intangible asset. As it is not identifiable. Within bracket, varahantula, not separable, nor arising from contractual or legal rights. Close the bracket. And cannot be measured reliably. Second point is goodwill arising as a result of business combination. Goodwill arising as a result of business combination. Recognize. Recognize. The book is specifically saying positive goodwill. Plus in the bottom. Recognize plus goodwill as an intangible asset. In the group accounts. As an intangible asset in the group accounts. Next subtitle, internally generated identifiable assets. Sorry, internally generated intangible assets.
Internally generated intangible assets.
Intangible assets. There are two types of these assets. Okay, there are two types. Okay, first one, research. And the second one, development. S3 la padichoma.
Correct.
No big difference. Anyway, when you come to research, you can say, 1 minute.
There are 5 conditions should be met to
Yeah,
recognize.
exactly. That's exactly what I want to say. Then
But research will not come to the asset.
No,
it will
research
be a-
cannot be considered
As
to
a
be capitalized.
capital.
It should be written off immediately to profit and loss account. Whereas development can be,
Okay.
provided it meets that five
Five
conditions. So I will share one diagram also. So what they are saying is recognition criteria. There are research phase and development phase. Research phase, no questions asked straight away. Good example is Thomas Alva Edison.
Edison.
Until people say he has done 1,000 researchers. I don't know whether it is truth or false. അപ്പം ആയിരത്തിൽ 999 റിസർച്ച് தான் அது அவர் போட்ட எஃபர்ட் எல்லாம் பிஎன்எல் தான் போடுறோம் அது முட்டை எப்படி உட்கார்ந்துடலையா ஸோ then the last one only became a development. Clear? So whereas development, provided that you have market feasibility, management intention, financial feasibility, and then technical feasibility, and the benefit is greater than the cost that you incur to develop, or if you provide satisfy all of these conditions, then you capitalize. So now we talk about expenditure specifically excluded from recognition. What are those? Let's find out. The standard states that expenditure on internally generated brands, mastheads, publishing titles, customer list, and items similar in substance are not recognized as intangible assets because they cannot be distinguished from the cost of developing the business as a whole. அவங்க என்ன சொல்றேன்டா இப்போ இந்த ஆடிட் ஃபார்மை நான் செட் பண்ணி போச்சல்ல இந்த ஆடிட் ஃபார்முக்கு எனக்கு கிளைண்ட்ஸ் தேவை இந்த ஒரு 100 கிளைண்ட்ஸ் போகணும் அதுக்கு நான் மார்க்கெட்டிங் எக்ஸ்பென்ஸ் செஞ்சு இந்த டேட்டா பேஸை நான் டெவலப் பண்ணி போகிறேன் அப்போ அந்த டேட்டா பேஸை எனக்கு பேலன்ஸ் ஷீட்டில் கேபிட்டலைஸ் பண்ண ஏன்னா நான் அந்த எக்ஸ்பெண்டிச்சர் செஞ்ச காரணம் வந்து இந்த ஓவரால் பிஸ்னஸை டெவலப் பண்ணேன் ஸோ ஐ ஹவ் டன் த எஃபர்ட்ஸ் இன் டோட்டல் அண்டர்ஸ்டாண்டிங் ஸோ தட்ஸ் வாட் தே சே நவ் தே டாக் அபவுட் இனிஷியல் மெஷர்மெண்ட் Intangible assets acquired separately, measured at cost. This is same thing that we studied in under PPE. The cost plus directly attributable cost. And probably you also may have to, they have not written here, you may have to subtract any discounts or rebates or subsidies. So this is intangible asset acquired separately. Second is intangible asset acquired as part of a business combination measured at fair value. Where we need to use IFRS 13 knowledge. Defined IFRS as the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction, meaning a normal transaction between market participants, whoever have eligibility in participating in this market. Previously known as knowledgeable willing parties in an arm's length transaction. Now they have changed the terminology. Internally generated intangible asset measured at cost. Sum of expenditure incurred from date intangible asset first meets the recognition criteria. Pirate. The pirate comes from here. That 5 conditions actually. Probable future economic benefits. Fine. So, sum of expenditure incurred from date intangible asset first meets the recognition criteria. Typically development. Okay. Directly attributable cost necessary to create, produce and prepare asset to be capable of operating in manner intended by management. Example, cost of materials and services, cost of employee benefits, fee to register a legal right and amortization of patents, licenses used to generate the asset. Now, with this we can now try this question. Can we try this question now? Apricot company purchases an operating license from an overseas supplier for 180,000 plus non-refundable purchase taxes of 80,000. The supplier's normal list price is 200, but it has awarded Apricot 10% trade discount. Apricot has to pay import duties on the purchase of this license of 20,000. As part of the purchase process, Apricot seeks advice from lawyer and incurs legal fees of 15,000. Calculate the initial cost of the intangibles. Can you work out? Parallel? That will be parallel.
No.
Mantap?
Short, it is 215,000.
115 or no?
Taxes ಏನು ಸರ್?
Non-refundable taxes are just
அதாங்க பீனல் கிடைக்கும்.
எப்படி இருக்கு? இப்போ நீங்கள் அதை இன்கம் பண்ணாமல் இந்த ஐட்டத்தை உங்களுக்கு யூஸ் பண்ணிடணுமா? Can you use it?
Okay, so that means அது வந்து unregistered taxக்கு zero இதுவும் இல்லை. அது claim பண்ணல அந்த tax.
அதான் non-refundable சொல்லிட்டானே.
அப்போ capitalize பண்ணணும்.
Of course.
So 2,000 plus 233,000.
Should let me check. Yes, indeed. Are you clear with that?
Yeah.
Okay, one more question. Dopper company is developing a new production process. During 2013, expenditure incurred was 100,000, of which 90,000 was incurred before 1 December 2013, and 10,000 between 1 December 2013 and 31 December 2013. Dopper company can demonstrate that at 1 December 2013, the production process met the criteria for recognition as an intangible asset. The recoverable amount of the know-how embodied in the process is estimated to be 50,000. Explain how the expenditure should be treated in Dopper's company's financial statement for the year ended 31 December 2013. മനസ്സിലൊക്കെ കാണും
ರೂಟ್ ಮಾಡಿಟ್ಟಾರು ಫೋನ್ ಲೀಕ್ ನಾನು
Okay. See, this asset, I can sell this garment. I purchased for 3,000 or 1,000 riyal. Purchased for 1,000 riyal. Now I am looking at find out how much to sell. Or I am looking at find out what is the value in my books after 1 year, for example. Let's say 10% discount, depreciation, so 900. Then I normally my expectation I should be keeping in the books at 900. But suppose I can only sell this in the market at 500 riyal. Is there any point of keeping in the books at 900? No point. Because if I close the business today, I can only recover how much? 500. So the standard talks about your assets should be kept in the books always when recoverable asset amount is greater than the book value. When the recoverable amount is greater than the book value, you should keep it at book value.
The recoverable amount is greater than the book value.
Book value, we should keeping that item in our books at book value.
Right.
Suppose now 900 is my book value, recoverable amount is 500, then no point of I am keeping this item in the books at 900. I should be keeping at 500.
So lower of
Exactly, that is the equation. Lower of book value or recoverable value. There is later another argument how to calculate recoverable value. I am not here to discuss that because that is a separate standard. So what you need to understand, I should always be keeping lower of recoverable value of book value. Clear? Now if you read here now, my book value or the cost is 10,000.
Yes.
Whereas recoverable value how much?
50,000.
So there is no harm in still maintaining at
10,000.
10,000. Suppose if this recoverable amount is 7,500,
Then it goes to
then I need to keep it at 7,500. Clear?
So in this one we can give a note
Yeah.
which is
Like
like
I
a
said,
stock inventory.
When valuing or when arriving the value in the books, it is always required to compare between book value and
Always required
to compare between book value and recoverable value. Full stop. The lower of the two should be taken. Within brackets, IAS 36. Clear? Fine. So that answer is okay. Now you can say that subtitle subsequent measurement. I will share the note. After initial recognition, an intangible asset can either be measured using the cost or the revaluation model. Cost model we understand. The carrying amount of an intangible. What is carrying amount? Cost minus accumulated depreciation. Amount of an intangible asset measured using the cost model is cost less accumulated amortization. Here you don't use the term depreciation, you use the term amortization. And also it is important not to forget impairment losses. There could be a possibility that you could have impairment losses. Then second point is revaluation model. The carrying amount of an intangible asset measured using the revaluation model is its fair value at the date of revaluation, less subsequent accumulated amortization and impairment losses. Only difference is instead of the cost model, you are taking the revalued amount. Active market. What is active market? If the revaluation model is followed, fair value shall be measured by reference to an active market. All other assets in the same class must also be accounted for using revaluation model unless there is no active market for them, in which case the cost model is used for those assets. என்ன சொல்றேன்டா, நீங்க intangible asset க்கு revaluation செய்யணும்டா, மற்ற எல்லா assetக்கும் revaluation இதே மாடல் யூஸ் பண்ணி செய்யணும். நீங்க
மற்ற assets
கூட்டத்தோட என்ன சொல்றது, கூட்டத்தோட கோவிந்தா.
So that means non-current assets.
Intangible assets and PPE especially. So you have to revalue the PPE and intangible asset following the same model. In a situation where you are unable to get an active market for intangible assets, then you follow cost model for that. Is that clear?
Yes.
Very good. So, it is uncommon for an active market to exist for intangible assets. Although this may happen for some intangible assets. Example, freely transferable taxi license. Market. But normally you won't find frequency of revaluation. How often you should be revaluing this? Revaluation must be made with such regularity that the carrying amount does not differ materially from the fair value at the end of the reporting period. When you reach into the reporting period, you have to see the market. If your book value is, let's say, 1 million, market is only saying 400, then there's a significant difference between the two. Then you are compelled to do a revaluation. So, how often is the question when you are looking at the market value on the year end, and if you find a significant difference between the two, you then do the revaluation. If not, no need. As long as your market value and the book value is not significantly immaterial difference, then you can live without revaluation. You understand me? Fine. Then accounting for revaluation. We talked about it. I will share this note again. When we talked about in our IAS 16. Revaluation increases or decreases for intangible asset is accounted for in the same way as it is for tangible non-current asset. So I don't need to discuss anymore. That other comprehensive income and then subsequent revaluation and all that story comes in here.
Yeah.
Clear? Do I want me to go through?
No.
Okay. Amortization or impairment test. An entity shall assess whether the useful life of an intangible asset is finite or indefinite. See, for there are two possible type of intangible assets. Some intangible assets which will have a limited life. Some will have indefinite life. So, finite useful life, amortize asset on a systematic basis over its useful life. Usually recognize amortization in profit or loss unless part of the cost of another asset. Residual value is normally zero. Amortization begins when asset is available for use. Review useful life and amortization methods at least each year and adjust where necessary. Whereas indefinite life, you cannot amortize. You will only do impairment. Conduct impairment reviews annually and where indication of possible impairment. Normally you have to conduct annually and suddenly you realize that there is a reputation damage, there is an economic crash, or there is some problem. Then you have to review whether there is an impairment to your intangible asset. Review useful life of at least annually to determine if events and circumstances still support an indefinite useful life of assessment. So you think that it is an indefinite asset. After 1 year, if the situation changes, it could only stay for another 3 years. So what they are saying is, every year test whether this particular asset's life is indefinite or not. Understand me? Fine. Now we will go through this question now. Stouffer PLC has a year end of 30 September 2016. The following transactions occurred during the year. S brand has become well known and has developed a lot of customer loyalty since the company was set up 8 years ago. Recently, valuation consultants valued the brand for sale purposes 14.6 million. S company directors are delighted and plan to recognize the brand as an intangible asset in the financial statement. They plan to report the gain in the revaluation surplus as they feel that crediting to profit and loss would be imprudent. The company undertook an expensive but successful advertising campaign during the year to promote a new product. The campaign cost 1 million, but the directors believe that the extra sales generated by the campaign will be 3.6 million over its 4-year expected useful life. Stauffer owns a 30-year patent that it acquires on 1 April 2014 for 8 million, which is being amortized over its remaining useful life of 16 years from acquisition. The product sold is performing much better than expected, as valuation consultants have valued its current market value at 14 million. Its company is developing a new piece of technology over the past 18 months. Cost incurred and expensed in the year ended 30 September 2015 were 1.6 million. Further cost of 0.4 million were incurred up to 31st December 2015 when the project met the criteria for capitalization. So, cost incurred after 1 January 2016 were 0.9 million. In accordance with IS 38, which of the following is the correct treatment of the brand? What is the answer? Can you check? What do you think?
So this 14.6 million, they recognized as a intangible assets.
Yes. Yeah, now question, now that's what they are asking. No,